I want to bring in Benjamin Tal, Deputy Chief Economist at CIBC, because Benny, you've been looking at some of this data, and it's really interesting to see, what the effect of this is. And we know Canada Housing and Mortgage Corporation has been thinking for a while, predating COVID, about trying to cool the over-enthusiastic borrowing, keeping the over-leveraged from getting in over their heads. You've had a look at this and how it's all shaping out. What's your analysis of how this might play out?
Yes, when it comes to the CMHC announcement, if you look at the numbers, it's really not a big deal when it comes to the market as a whole. It's very narrow, but very deep. Namely, if you are impacted, you will feel the pain in terms of the decline in purchasing power of about 10% or so. But for the vast majority of borrowers, that will not be a factor at all because, listen, insured mortgages is basically a shrinking target. It is falling and falling and falling. So if you're really trying to impact only the insured segment of the market, even without the private insurers, it's not a big deal. So the impact on the market is going to be 1 or 2%, nothing to write home about.
And I think that's an important point here, is that the people who will feel it a lot, to your point. So there will be people who are shut out of these markets. But of course, we concern ourselves with the broad impact. And so it doesn't sound as though this will have a devastating effect on any of the sort of related industries, all of the reasons why we care about housing that go beyond the buyers and the sellers.
Absolutely. I don't think it's a game changer by any stretch of the imagination. I know that what CMHC is trying to do, they're basically trying to protect taxpayers' money. They're trying to reduce their market share, and that's exactly what they're doing. But the impact on the market is really not a big deal. If you look at the numbers, it's really not big enough. Simple as that.
Now, you've also looked at the amount of income support being offered to Canadians. And I think this is really interesting, Benny. This is research you've done looking at the wages that have been lost here because of the shutdown, put up against the supports, the emergency benefit and the wage subsidy. And it looks as though you could argue that Canadians are actually better off than they were. Just walk me through what we're looking at here.
Yes, if you look at this chart, you can see the story. And that's why the government is starting to tweet about, listen, if you're cheating on CERB, you will pay the price, because we are basically providing more assistance than the actual income that was lost. If you look at all the forces at play in the labor market, namely the unemployed, the people who are working 0 hours, and people that are now out of the labor market but still looking for a job, you add all of them up and do the average wage and stuff like that, you get the number, how much income we lost. And then you look at the assistance that we got through wage subsidies and clearly CERB, and guess what? It's much higher than the actual income loss. So we have to be aware of the fact that this is not a perfect system. It's not a criticism because the government needed to do something. But now we reach a point where we have to start thinking about undoing this program. How are we going to do it while keeping the incentive to work alive?
And of course, it's a problem in the U.S. in a different way. They've got different fiscal supports. But we've heard talk of the so-called fiscal cliff. When the supports are removed, what happens to personal spending, consumption, all of those figures? When you look at the data that you're showing us here, Benny, should we worry about that there may be a little burst of activity because people have more money in their pockets right now that will disappear at some point? And that actually could be a bit of a break on the economy.
Yes, if it's a cliff, then it's going to be a significant impact. But I don't think it will be a cliff. I think that those programs in the US and Canada will be with us for a while. They will be different. They will be modified. They will try to increase the propensity to work, but they will not disappear overnight because we simply cannot afford doing it. We see how the market is reacting now to some rumors about a second wave. There will be a second wave. You cannot just stop this assistance. You just have to be smarter about it. The first wave was just make sure that there is enough money in the system. We did it. Now we find out that there is more than we need. Maybe you have to scale it down in a smart way. That's the second wave. So I see it happening. There's not going to be a cliff. I don't think so.
You've also done a little work on the service ratio, household debt service ratio, which is obviously important in terms of our ability to manage our debt. What did you find when you looked at that?
Yes, it's very interesting because on the one hand, if you look at debt, it's actually falling. You know, credit cards down, even mortgages relatively stable, lines of credit going down. So you have less debt in the system at this point. It actually went down. And as I told you just 2 seconds ago, income is not going down. So the debt to income ratio is actually going down, ironically. And if you look at the debt service ratio, the chart that we are watching now, it's actually going to go down because, again, interest rates are very low and went lower. And you have a situation in which you have deferred payments. Therefore, income is there. So debt payments as a share of income will go down. That's something that we have seen before, but it will be even more significant this time around because of the special assistance that we're getting from the government. Very, very interesting.
And obviously, we'll keep watching how this plays out, Benny, but we're beginning to hear, and the government's trying to get a bill passed to try to adjust the CERB as we go, so there isn't a disincentive to work. Do you think, how important is it that we get that right, I guess, as we reopen, that we get people working even though they might be better off on the CERB?
It's so important because today the system is not great. Again, we did it on the fly, we did it fast, we needed to help the economy, fine. But now we have to make sure that we are smarter about it. So the CERB is overutilized. The wage subsidy program is underutilized. We have to make sure that we shift the activity towards the wage subsidy and reduce the motivation to rely on the CERB and make sure that the propensity to work, the willingness to work is there. So we have to be very smart about it. We have to think hard before we change it. It's not going to be a cliff, but it's going to be a gradual process. And it's extremely important as far as the trajectory of the recovery is concerned.
Benjamin Tal, great to talk to you as always. Thanks so much for that. Benny Tal is Deputy Chief Economist at CIBC.